Okay, so we ended up getting the upside we were looking for ticker symbol VOCL. Let's go ahead and go over those potentials now for the next sessions. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a VOCL, technicals, raw price action, and statistical threat of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team, so we're looking at VOCL on the weekly chart, and this is one of the reasons that we were able to tell that we were potentially going to make a pretty nice upside, and that is due to this falling wedge. Okay, so we actually did speculate that we were to break out from this zone here, right? So if I can actually just block out the price, you'll see that there's a trend line right behind that green candle. There you go. So that candle there is actually representing the top side of where I believe the price action could go. So from the signal that had fired just a few days ago, we said that we could move about 91.7% to the upside based on a statistical back test that I actually performed over the 6-hour time frame. We'll go over those details just now. So you can see that price action actually led up. Actually, what was the top side I said here? That was 842, where I was guessing right days ago, and the top side of the candle here ended up reaching. It's hard to read there. Here we go. Let's see. A high of 885 in comparison to the 842. So very close. We ended up getting that target very close to what we said. But anyway, this is still. What I do have to say here is that it's not done. In fact, the signal did fire off, and there are still many more metrics to go over, as VOCL could be presenting a pretty nice. I don't want to call it a reversal just yet, but it's definitely getting a nice pump to the upside. Okay, so yeah, let's go ahead and go over the conditions for the statistical backtest. The reason why we were able to tell that we could make a move of close to 100% to the upside, right? So we took a backtest of volatility versus momentum. This is what I call the footprint model. And anytime that volatility has contracted into critical zones, which is within the 15th percentile, and it starts an expansion phase towards the upside, please remember that volatility is direction neutral. So only because volatility is expanding does not necessarily mean that the price action will go to the upside. Okay, so yeah, anytime that volatility has contracted into these critical zones and started an expansion phase, particularly beyond the 15th percentile, paired with stochastic momentum with an upside pivot, I have taken note of every single iteration where that has happened. Sorry for the pause, I'm going to show you here. So for example, here, we took from the opening value to the high of the range, or to the highest point of the range from that criteria being met of volatility versus momentum profile, right? So that was what was able to give us some source of some sense of direction here, right? So I took that back test throughout the entire trading history of the VOCL asset on the 6-hour time frame. So every single one of these measure the upside thrust, the duration of the iteration, and the amount of times that the profile of volatility versus momentum have guessed the upside correctly versus incorrectly. Okay, so that is these are our sample set, the sample set, and now let's go over to the data set and explain what's happening here. Okay, so this, if some of you are familiar with statistics, then you will know what I'm speaking of here, and this is your distribution chart, right? So let's go ahead and go over the stats though. So we have a total of 65 iterations, right, throughout the entire trading history of the asset. 47 of which have been correctly guessed to the upside. So that gives us an average upside accuracy of 72.31% with an average upside thrust, aka the mean, of 91.78% to the upside on an average duration of 9.05%. This is proof of work. Now, I did take this further, and I did calculate the standard deviation and also the lower bound of the first standard deviation and the upper bound of the first standard deviation. Unfortunately, the lower bound came into a metric below 0, so that is unfortunately unusable in statistics, right? So I want to go ahead and point this out. So we have a standard deviation of 293.10%. So that would be where 68% of the results land. Right, so 293.10% would be 68% of the results, which are our typical performers, right? We have our lower performers and our higher performers up here. So since we have an unusable lower bound, we actually use the upper bound. So we have the upper bound landing at 384.86%. Okay, so yes, I get it. It's a huge upside metric. And please remember that I did speak of not talking about the 293 or the 384 until we covered the 91.78% move to the upside. So let's go ahead and take a look at the metrics here, because we may very well have succeeded that upside already. Okay, so let's look at the criteria though. So it looks like the signal fired. It looks like the signal fired right about, yeah, I'd say about here. Okay, so this was right when we were, this one right here, right when we have the volatility component and the moving average upside of the 15th percentile. Okay, so from this candle here is what I'm suggesting. So the opening valuation of this candle here to the top side of the range that we face today, that's where we measure. Okay, so let's go ahead and take that into consideration. This opening valuation, if we can see the OHLC, the open, high, low, close values up there, that tells us that we open at 430 on that particular candle. Okay, so let's go ahead and take that 430. Okay, let's see if we can get close to it. Okay, 430 there. And we take the price action all the way to that top side up there. Okay, and let's see. What do you know? We made about 100, let's see. In fact, yeah, tight. We got about 106.68% to the upside. So I would say about a 90% accuracy, right? I mean, pretty much it pretty much beat the 91.78% move to the upside that we were looking at. But if you look at it from opening to closing, let's go ahead and keep that into consideration there, right? So let's go ahead and do the 430 again. And take the 725 close, right? So let's see. We have now a move that's about 68.63%. So yeah, I think we did pretty good, right? In determining what that upside could potentially be. Okay, so that marks off the completion of not the entire set. It marks off the completion of just the average mean, right? Or the mean itself. So now we have, I guess now it is in essence safe to evaluate the potential of hitting the 68% of the results being the top side of the 293.10. But please remember that I'm not suggesting this is a standard deviation, meaning that you have this range of performers to look at, right? Meaning that you have anything from the current value to the top side of the standard deviation to look at for higher probability targets. Okay, so that takes us now to the 430 again. All right, let's go ahead and see if we can get, I guess 431 is fine, whatever. Let's go ahead and measure 293. 293 spot 10%. I might not get it. Let's see, I guess 294 may do it. That's fine. Okay, so yeah, that's taking us very, very curious here. Very curious here. Is it actually taking us to an inflection point that I previously spoke of? And that is located right at 1698 at the very top side of the entirety of the standard deviation is taking us to 1698. Okay, so now, what can we do as far as determining what higher probability targets, right? So we can take a fib from here. Let's go ahead and take some geometrics into consideration. We'll take the swing high. You know what? We can take the swing high here to the swing low of the overall range and see what we have in our probabilities here, okay? So first of all, we want to know that we can continue to the upside, and a good way to do that would actually be through the means of the new indicators that I'm going to be releasing. These are the new algorithms that we have essentially remastered and reconfigured. Okay, so we definitely got that long signal here right at the opening of this candle, which was an opening value of 430. So if we would have taken that into consideration, we would be up approximately 50% up on the day, and we would have been up around 90%. So that would be actually you would be up around 69% at the closing value, right? 67%, right around there. At one point of the day, you would have been up 107.3% if we were to face the algorithm's suggestion to long the asset, right? So it does give us a short signal, right? It gives us a long here, it gives us a short there, right? We have a long here, so it plays the ranges for us. And as you can see here, we got a huge short opening right at the opening value here, which was at about 736. And this actually led all the way to the downside here. And we got finally the long signal printed right at this candle, giving us a pretty nice downside, right? So awesome stuff within the new algos. Okay, so if you are interested in this, in the new algorithms that I'm presenting here, then please don't hesitate to actually reach out and send us an email right over here. Okay, so this is actually the package that we're going to be releasing to the new pre-order people, right? So I know that I'm already getting a pretty large amount of requests regarding these indicators and the algos. So know that I'm going to also be releasing my ARC Div 1. So this is my divergence strategy in combination with the armor strategy. So far, the forward test on this has proven 80% profitability. And it is a metric that actually keeps into consideration stop losses and all that good stuff, right? So we have a trailing stop loss based on an average true range. We can do it in any which way you can ever imagine, right? So far, FNGR is actually showing very nice profitability with the algo here, okay? So we would essentially release this strategy together alongside the 7 other indicators as well. So reach Ike or myself here at arcindicators@gmail.com, and we'll go ahead and continue touching on that. Okay, so yes, we wanted to validate to see if we still had a long signal here printed, and we in fact do. Okay, so now let's go ahead and look at the last part of the analysis here, which will be the RSI. You know, before I do that, just notice that we are in the process of breaking outside of this descending channel, right? So notice here that we have test number 1, 2, 3. And if you are a student of mine, one of my master students, if you are a regular viewer, then you know what happens at test 4, right? That's the true breakout. Test number 3 always leads, or usually most of the time, right, leads to the biggest capitulation event and reaccumulation event before a thrust to the upside, of which we got, and statistically speaking too. Okay, so natural pullback here, we could actually succeed the upside on this and then start testing the support before a continuation to the upside, but we must validate first, right? So let's go ahead and take a look at the RSI here. Immediate short-term time frame, 30-minute, is suggesting a continuation to the upside with both the SMA 14 represented by the pink line and the blue RSI signal or cyan line. Now, this is high enough to be affecting or cascading into the larger time frames. So now this is the 4-hour time frame, absolutely getting that effect from the shorter time frames with an upside pivot. Now it's upside into the overbought percentile. SMA 14 is signaling a continuation to the upside. Same situation here with the 8-hour time frame. Daily time frame also pivoted to, I mean, this thing is straight vertical here. Upside pivot on that SMA 14, bullish cross upside of the 14, and the RSI signal has now entered the bullish control zone, and it's particularly the bull strength percentile. Okay, and now very notably, we've actually made official crosses here of the SMA 14 on the 3-day time frame and the 5-day time frame. What I would have to point out here is that the 5-day time frame is already, I mean, wow, it is 0.6% away from the gravitational zone of the bear strength percentile, which would essentially, gravitationally pull us to the upside here. And then price action would likely continue. So I guess what I'm saying here, team, is that there is a higher probability of, excuse me, of a continuation to the upside. But if you notice here in the 15-minute time frame, we have a little bit of a pullback coming in. And that could actually signal some longs, right? Some stragglers that are still, probably willing to get long the asset. So let's go ahead and speculate on that just real fast before we call it quits here. And let's load up my ARC averages algorithm here and pull up the EMAs 7 and 9. So let me display the EMAs. I'm going to take away. Oh, those are already too small. Okay, so that means that our next support could be looked at either in a shorter time frame with the moving averages or in a discretionary target using previous areas of historical supports and resistances, right? So in this case, I wouldn't actually, I wouldn't be too afraid if the price action ended up reversing to about 629. I'm not saying that it is. I'm just saying that it would be okay even still. Okay, so now if we are considering price as a support instead of a moving average, then let's go ahead and take that into consideration. Price right now is sitting at about 725. And we could see a drop to about, I'd say about 648. So naturally, I have to give you 648 to 629. Okay, so 648 to 629 would be that retracement and also loading zone. And we are talking about particularly paper trading, right? Simulator trading. We want to make sure that we can keep retail safe. All right, team. So yeah, I'm looking at, I guess we can adjust the target a little bit, right? So 654 to 629 would essentially be that support touch that we're going to wait for before a continuation to the upside. It may not reach all the way down there. I have to warn you, okay? There is a chance here that we could get a loading zone right at about 7 flat. Okay, highly confluent area there as well. So I'm going to just go ahead and note it down here. Okay, so yeah, I just want you to, I want to be as abundantly clear as I can be that a lot of times when FOMO takes over, it really takes over, and technicals and stats start becoming a little bit hazy. But still, I still have an edge over the market. So let's go ahead and continue and see what else we can do. Remember that the top side of the target that we're looking at here would essentially be a 294% move to the upside, suggesting almost 17 cents. Okay, so, I mean, but there's going to be a lot of ebb and flow on that way up. So please remember, first and foremost, that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good night, and I will catch you at the bell. Mañana. Adios.